I want to ask you this, and I mean this sincerely. I actually know somebody who pulled money out of their 401k. People are going to say it's stupid, but it was penalty-free and bought Bitcoin with it. I mean, it sounds ridiculous, but it's happening. Do we have any idea of the breakdown of retirement, people pulling money out, what exactly that money is going for?
Well, you stated the headline very loud and clear, and it's from the joint research that Personal Capital conducted with Kiplinger's, and 6 out of 10 people are withdrawing money from these accounts. And I think you also mentioned that the primarily that money is going into ordinary living expenses, about 61% of it. About 40% of it is going into medical expenses. But there's other areas where it's going too. It's going into home improvement. It's going into auto repairs. We didn't see much in our response in terms of it going into Bitcoin. But bear in mind, these are people's retirement assets, the nest egg that they built up. Many of these respondents to the survey have been saving money for decades to build up this nest egg. And quite frankly, the results that we see from the survey are astounding.
But Jay, again, when I look at the average 401k balance is $8,000, and the numbers that you guys have is the average withdrawal is $75,000. So these are not. The pandemic has mostly cost sort of service workers their jobs. They tend to not have much savings because they haven't made a lot of money. So who are these people? They're clearly wealthy, educated people that are pulling money out of their accounts.
I think that's right. When we look at the U.S. marketplace of investors, clearly the front lines they're incurring a lot of pain. The specific respondents to this survey, they're people in their 40s, 50s, 60s, even people into their mid 70s. So they're people that are very far along in their financial career, so to speak. They've got about over $100,000 in median income. They've saved up over $300,000 in their nest egg. So we're talking about a segment of the population. But as you say, greater than a third of them have pulled money out of their retirement accounts in excess of $75,000. So they've saved up this money over decades. That math is about 25% of their portfolio that they're drawing down, their retirement portfolio that they're drawing down.
It's going into housing. A lot of homes being built and improved on around here, Jay. I mean, I got to imagine the money's coming from somewhere. And listen, the CARES Act saying you can take it out without a penalty, it obviously spurred people to act.
It sure did. I mean, it gave people a $100,000 exemption to either draw down their retirement account or take a loan against it. And as we said, the data suggests from the survey that primarily it's for living expenses and also medical expenses. Some people really need the money, but that's the biggest question for us in the survey too, is do the people really need the money? Are they buying homes? Are they improving homes? The reality of the situation is the majority of the American investors, these households, they do not have a financial plan. They don't know their net worth. They don't know how much they're spending versus how much they're saving. And that's a concern. They're drawing down on this nest egg. And the effect of this is that over a third of them believe that they're going to have to work.
Shepard Smith here. Thanks for watching CNBC on YouTube.